Where's the market headed in the month of April? We're going to talk about that this morning on 3 Minutes on Markets and Money. As we kick off a new month, the month of April tends to be statistically a strong month with positive returns the majority of the time throughout financial history. The question is that going to be the case this month? And what does that mean for the market where it is currently? It was just a few weeks ago that the market sold off into extreme oversold territory on the Russian invasion of Ukraine. Since then, the market based and then made a substantial rally to very overbought conditions just last week. As we discussed then, the market would need to consolidate here and importantly, hold these important moving averages, which are sitting just below market levels right now. That is now critical support for the market. If we break these support levels, markets are going to retest lows or potentially set new lows in the weeks ahead. So it's important that markets continue to hold this range of support through here, consolidate long enough to work off this overbought condition. We're currently on a sell signal. The market is overbought. If we can work off that condition through a consolidation process, that would allow markets to move higher through the end of the month and into the month of May. Once we get into May, really kind of all bets are off. May is when the next Fed meeting is. They're going to be hiking rates. Expectations are now that they'll not only hike rates by 50 basis points, they'll also announce the schedule of tapering of their balance sheet. That's now going to remove more liquidity from markets. And as we get into the summer months, we're going to start to see slower economic growth, slower earnings pace, etc. That's also going to potentially weigh on markets in terms of justifying current valuations, particularly if interest rates and inflation remain stubbornly high through that period. Once we get through this period, we'll have to figure out what happens next. But as long as we can hold support here on the markets over the next week or so, that does give us an opportunity to have another leg higher, potentially even retesting the previous highs from back earlier in January. That would not be a surprise at all. A retest of highs would be well within the context of reflexive rallies, and it doesn't change the dynamic that if we are moving into a potential bear market scenario later this year, a retest of highs would be well in the context of normality, and that would actually be the type of rally that would suck a lot of investors back in at exactly the wrong time. Pay attention to the technicals. We'll watch it for you, report back on it to you right here on 3 Minutes of Markets and Money. I'm your host, Lance Roberts. We'll see you next time.